What's up, guys? JD here, and on today's show, I am talking with Drew Green, CEO of Indochino, and one of the most interesting people I know in the world of business. I'm not exaggerating when I say this. This is one of the best episodes of Making It I've ever done because Drew's story sounds like a movie. If you were writing a movie about an entrepreneur who just absolutely crushes it, has wins, has fails, but does it spectacularly at every level, Drew is the man. So this story is sort of Drew's journey, but I skipped all the boring parts and I'm just covering the stories that were impactful, how Drew kind of went from 1 to 10, in some cases 1 to 100 in a flash or what seemed like a flash. I talk about the how, and that's super important. You guys know my focus on this podcast in these videos is all about the how. I don't care about the what as much. I don't care about the why. I want to know how you did it. Why you did it too is interesting, but I want to go beneath the surface because I want to not only hear a great story, but I want to take something away from it. So we cover all that in this episode. You guys are going to absolutely love it. I know it. I'll get to that in just a sec. Before I do, if you like the show, if you're getting value out of the content that I'm putting out, make sure to go to jondavids.com and subscribe to the newsletter. You can also find out about the new book out June 18th, 2004. Pre-order now, Marketing Superpowers. Build a brand so good that getting customers feels like magic. Pre-order now. You will love the book, and you're going to love this conversation with Drew Green. Let's get to that right now. We're live. Drew, welcome to the podcast.
Thanks for having me, Jonathan. I appreciate it. Good to see you, man.
So we've known each other for, I guess, more than a decade now, because what I was just thinking is it was a decade ago in 2014 that you called me up. I remember I was walking to work and you called me up and said, "Hey, I'm thinking about taking this new job and I wanted to get your take. Which one do you think I should take?" And you presented a couple options. And one was a really big company that everybody knows, and the other was Indochino, where you ended up.
Yeah.
And I remember you naming those two options, and I thought, man, this is a no brainer. Like Indochino, that's the place to go. So what I'm curious about is tell us about that decision and like what was happening in your life that led to that moment, and how you actually decided to join Indochino.
Yeah, I do remember that conversation. And I think, a lot of credit has to go to you.
Oh, please, you knew what the answer was.
Yeah, it was an interesting time in my life, right? Like my kids were 6 and 8 at the time. And I had just sort of spent almost, 6 months straight just driving them to school every day, picking them up, really, really sort of just engaged with their littleness, right, and spending as much time as I could with them and family and friends. And I'm a builder and a creator, and so I was getting a little bit itchy, right, to start my next company. And there's actually three options. The third one I never told you about, but I was really far down the path. So one option was to create a business that I thought would unify Africa, and technology based e-commerce slash fintech. And so I had spent, months and months sort of putting this plan together. And that was sort of option one. Option two, like you said, was, this amazing company that frankly I have admired, my whole career, have competed against my whole career. And it was kind of an honor, right? Because it was like I was being recruited, to college or the draft. I mean, they really wanted me to join. They really, sort of rolled out the red carpet. And the funny thing, I don't know if you know this, but I actually signed that agreement to be CEO of one of their
I did not know
divisions.
that.
I actually did sign that agreement. It's a running joke I have with them to this day. And then, the third option was Indochino, not in order. I'm giving the three options, but Indochino had a chairman at that time, Tom Stemberg, who, your listeners might know or might not. He founded Staples. He was chairman at Lulu, and he was just such a dynamic man. He was just an incredible man, had an incredible life. He was very sick at the time, but we really bonded. And, I remember him kind of looking at me and saying, "What are you doing?" You know, you're a builder, right? Like let's build something. Because I was, hey, Amazon, and my wife, is loving that opportunity, and all that came with it. And so that, but that one conversation I just remember. I mean, we had lots of conversations, but him saying, "Hey, you're a builder, you're a creator, and so you can't go there. You have to come and do this." And not,
Was it an enticing offer? I mean, you actually said you signed the offer. So were they offering you signing bonus, salary, stock option, like the whole
it was
package?
an eight figure offer, um, and probably would have led to traveling the world and living in different countries and all that, which is a big part of my journey. I believe in the experience. But with Indochino, what ended up happening was that the sort of pitch to me is, look, you're an entrepreneur. This is a restart. We're going to restart this business. We're going to, you know, redo the cap table. We're going to infuse capital. You're going to do your thing. You're going to raise capital and build the business. But this is a restart. And I had never heard the term restart or restart up. And I liked it. I liked it a lot. And so, frankly, it was a huge risk, Jonathan. Like Indochino was in a bad place. I mean, we were losing, I don't know, man, almost a million US a month, on, less than a million, sometimes more than a million in revenue a month. And so it was a very interesting company for a lot of different reasons. And obviously now we're a very, very big company. We've been nine figures in revenue since 2018, but it was not a safe bet. Right. And so when I think about my,
And so can you tell us about what Indochino looked like just briefly? I guess it was founded in what, 2008 or so?
yeah, about that.
So to found in 2008, you are asked and then you end up joining in 2014. What happened between 2008 and 2014? I'd imagine it went up and then it must have crashed down at some point.
No, not necessarily. I mean, it was a slow build, right? Like most, early stage companies. Look, I think the founders are fantastic. They did, they had some foresight. They had the guts, and the brains to bring Indochino to life. Um, it was a gradual build for them, right? And I think they did a really good job building this online only business. But then they sort of hit a dry patch, right? And maybe that was to do with the capital they raised and not knowing exactly how to deploy it. Um, so you raise capital, and Jonathan, when you raise capital, you're beholden to deploy it, right? And deploy it as quickly sometimes as you can, and grow. And so they tried that, but then the company basically went up and then leveled for like 2 3 years. And while it was leveling, there was half a dozen or a dozen cash calls. Like it wasn't clicking. So no growth and then losing money. And I think they were kind of in the state of, hey, we either have to get somebody to restart this or we got to move on. And so luckily, I got a chance to restart it. We've raised $100 million or more.
Okay, pause there. So you come in, and I know it was a whirlwind. In fact, I've heard from employees and former employees that it was like you came in and it was a tornado. So describe that first 90 days of what it was like.
Yeah, I'm intense. There's no doubt about that. Look, it was go time, right? The company did not have a lot of capital. I'd be, it was, it's. I don't know if I've ever said, mentioned this before, but we essentially had 90 days of runway.
Did you know that before you took the job?
I sort of tease my partners that I didn't quite know the whole thing. I didn't know AP was as big as it was, but we essentially had 90 days. And I had said kind of a couple months prior to getting in there, I said, hey, here's what we're going to do. We're going to raise $30 million. We're going to put that on the balance sheet. We're going to launch into retail, and we're going to build an omni-channel powerhouse. And that's actually what happened, Jonathan. Like literally 4 months November, December, January, February. 4 months in, we closed on 30 million at a valuation that was, 22 to 25 times what we were before, and that capitalized the company. It got everybody excited, and away we went. When you say that first 90 days, it was a whirlwind. I was in China, almost every other week or every 3 weeks, with this investor, and trying to work out our supply chain, which was a mess. And what I didn't do was I didn't come in and I didn't fire everyone, right? I really made a commitment day one. Let's work with this team and let's get the best we can out of this team. And I'm proud of that, right? Like, some of those people are still with us. Um,
And you didn't really have the luxury either because you needed the business to keep running while you were raising capital. If you didn't raise capital, it would have been game over.
yeah, you never know if, one thing doesn't lead to the next. I mean, I'm not a fatalist like that, but, we certainly needed to make a change, right? And I didn't feel, and this is kind of my legacy in business. I love strategic partnerships and strategic investors. Done dozens of deals like that across the portfolio. And so, I felt strongly that we needed a strategic, investor in the company. We had private equity, we had venture, two amazing partners still to this day, but we really needed a game changer, right? Like, money alone was not the answer. We need to change our cost structure,
So
supply chain, the whole thing.
can you talk a bit about the strategy there? Because one of the things you do extraordinarily well, I've never seen anybody do it quite like you, is you raise capital. You raise huge amounts of capital for big ideas. And it's one thing to do that once, but you've done it like two, three, four, five, you've done it many times. And so can you talk about how you went about, you picked a partner in China, you got that deal done, then you did two or three or four more deals for capital for Indochino. I don't know if there's been anything else since then, but what's your process there?
Yeah, I mean, so there is a secret sauce. I can't tell you. No, there is an approach. I'll give you the Indochino example. So when I looked at the business, here was this very, very cool regional brand that I believed at the time was solving a problem, right? Which was fit. There's nothing worse than buying clothes that don't fit. And I love clothes. And so I really fell in love with that concept of a solution within apparel. But to do it right, you have to, the back end, the supply chain, the production, the fabrics, it all has to be perfect and it all has to be scalable, which it was not at the time. And so my idea was, and the idea at any time you're raising capital is you've got to create a triangle of value, right? And what I mean by a triangle of value is there needs to be value for the investor. There needs to be value, obviously, for the company. And then there needs to be value for the consumer, right? In a direct to consumer world. And so in that triangle, it was really clear to me that if we could get a production slash supply chain investor really heavily vested in the company, not only on the capital side, but along with that 30 million came this incredible now 10-year agreement that reduced all of our costs, gave me 90-day payment terms, and a dozen other things I could list. And so all of a sudden, you've almost overnight fixed the P&L, right? You have to scale it, but you fix the P&L, and then you have a balance sheet to go forward and launch into retail and really invest in it. And so it's figuring out that triangle of value first, hunkering down. I remember, the CFO and I working literally till 10 o'clock every night on this presentation and business plan, and really putting it all together and figuring out, okay, how do we extend our runway and do all these things. And I'll always remember him because, I mean, he was incredible. I think we went to China and Japan, probably 12 times in 10 months, like something like that, and we got it done. And without it, the brand wouldn't be here.
I love that triangle of value, figuring out, and the three pieces are value to the company, value to the investor, and value to the consumer. And you did that also with, there was a media company involved at some point. I don't know if they're still involved. Can you talk about that deal?
Yeah, for sure. So we've raised from three magnificent strategic partners. So Diane Group is our production, or what I call our supply side investor. We then, the following year, did a really creative investment with Post Media, where they basically pledged $40 million of media, and I gave them revenue share on my Canadian business. Now, to put that in perspective, my Canadian business is only 20% of my revenue. So I was basically saying, okay, we're going to create a national brand with you, Post Media. Obviously, can only do it in Canada. So they had rev share, and then they had a little bit of warrants that they still have to this day. And then the third one was Mitsui, which is a company I'm just in love with. I just think Mitsui is one of the greatest companies in the world. And what I saw there was, at some point they'll be an amazing partner to expand internationally, which we were pretty engaged in doing right before COVID, and obviously have pulled that all the way back. And so, yeah, those are our three strategics. We haven't raised capital, a priced round since 2018. So what's that, 6 years ago? So, yeah,
And is Mitsui one of the they're a Japanese company, right?
yeah, they're what's considered a trading company in Japan, and
Can you
so
talk about that? This is one of the five that Buffett invested in.
I think so. Yeah, yeah, that you really good there, Jonathan. Yeah, he did.
Yeah, Warren Buffett famously, I think 2 years ago, put money into the five Japanese trading companies. And so, what strategy do they have, or what strategic pillar do they have that you think will be useful to Indochino?
Well, I mean, for us specifically, was the thought around expanding into the Japanese market. It's a 10 million suits a year market, 10 to 12 million suits a year market. It's a suit culture, even to this day. And so, in fact, the largest suit company in the world is Japanese. And so, just saw an expansion opportunity there. And then, we took our time. I got to know Mitsui over probably 3 years before they made the investment. They offered a lot more than I ended up closing on, um, because we just didn't need that much capital at the time. And they just there's just the culture there is something I admire, and that's for me. Like anybody I work with, anybody I partner with, and even with investors, like I want to admire them, and I do. I really admire the culture that Mitsui has in the business that they have. It's pretty extraordinary.
You've got a style which is that you don't just want to do big things, but you want to have a lot of fun while you're doing it. You want to travel, you want to be able to rub shoulders with amazing people that you love hanging out with, and that seems almost as important to you. Was that always your kind of work ethic, or did that sort of come later as a luxury? Did you have to sort of grind your teeth first?
It's always been front and center, right? Like I believe that it's the experiences that you have, that is the real sort of treasure, right? I mean, famously, the alchemist talks about the journey as the treasure, and that's certainly I subscribe to that. But even at taking it back a step and just really making sure you have full experiences in your life, everything from you know dreaming big and having big ideas and going and trying to execute them, to being a great father, to traveling all over the world and meeting great people. Yeah, I've been really lucky, right? Like I've lived all over the world. My kids, they're here in Napa, following their basketball dreams, and I'm, rooting them on and supporting them. And I just believe that, Jonathan. Like as an entrepreneur, and we all work really hard. I don't know if anyone works as much as I do, but um, you can make money. It's going to happen. But can you enjoy it, and can you have the full experiences that are going to define true happiness? So
Can you talk? So there's going to be a lot of people listening, and I'm sure everyone's inspired right now. Can you talk about what got you to the point that you were the guy that was asked to sign a 8-figure contract with Amazon and recruited to Indochino, and you're going to save Africa? Like, what did you do? Briefly, because I'm sure there's 30 years of story you could tell here, but what got you to that point that you were this coveted as an asset?
That's a really good question. I haven't been asked that question before. Not in that way. I don't know. I think I've been really, really fortunate to work with a lot of great people. You know, um, in my early 20s, the DoubleClick experience, then being sold to Google, was, an iconic, it was an iconic transaction. And a lot of those people, literally dozens of them, I spoke to one this morning, are still my friends, right? And so I don't know, you build a brand. Here's a way at this actually. When you think about entrepreneurialism or being an entrepreneur, everybody thinks about it's about starting a company, right? I got to start a company and then I'm an entrepreneur. Well, actually, being an entrepreneur is as simple as understanding you're your own brand and you're your own business. And if you manage your life in such a way that you grow your business yourself, education, experiences, great friends and family, you're growing a really successful business. Now, whether that includes 1 to 100 startups or it includes no startups and you're a lawyer, you can be an entrepreneur.
Quick break so I can tell you about my new book, Marketing Superpowers. Build a brand so good that getting customers feels like magic. I have spent over a decade working with over 20,000 influencers, Instagrammers, YouTubers, celebrities, seeing how they connect with audiences, seeing how they build their own personal brands, and kind of dissecting exactly how it works. And then a lot of these people wind up launching businesses and they do so well. How are they able to do it? Is it just because they're famous? No, there's a lot more to it than that. I have dissected it, I have analyzed it, I have put it in a book for you called Marketing Superpowers, available right now at marketingsuperpowersbook.com. Now, this is not a book about becoming an influencer. It's about the influencer playbook and how they launch brands, building a community, building a movement, building a connection with your customer like no other. Get it all at marketingsuperpowersbook.com. You can also get a free chapter there and tons of bonus content when you buy the book. Available for ebook, audio, and of course, get your physical copy, marketingsuperpowersbook.com. I will see you in the pages of this book. And that's something you just hit on something there, which is you had a lot of relationships. So I think being early days, DoubleClick, and for those who don't know, DoubleClick is the company that was acquired by Google and effectively formed Google's advertising business, which is the whole company today. So super great timing, place to be. And you were also like a rock star. Weren't you telling me that you were capturing whales there? Weren't you getting huge contracts for DoubleClick when you were there?
Yeah. I was really fortunate again to, like, I was in a position in my 20s, living in Manhattan, managing a team, closing big deals. Most of those people that work for me are still friends to this day, and actually a couple of them are still at Google. Um, yeah, man, we were closing big deals, right? Like,
So you're in New York City in your 20s, closing deals for what will become the biggest advertising company in the world. Then from there, you but what you did was you maintain relationships, because I think the thread throughout the story is you have relationships. I mean, having friends in Canada and China and New York City and Japan, and being able to connect the dots, as you said, the triangle of value. You have to have a lot of points to be able to find the right ones for that triangle at every given moment in your journey. Can you talk about, so you have that amazing experience at DoubleClick, and then maybe some stuff happened in the middle, but let's get to shop.ca. What was the big idea here? And just give me this incredible story.
yeah, so when I think back, it's about 14, no, only 13 years. I was still in the US. My kids were super young. We were having a blast, right? Making a lot of money. Um, doing all the things that you do as a young family. And I don't know, I remember feeling like I wanted to be Canadian again. It was really important to me, to go back home. And we had our green cards and we were settled. But for me, I kind of had three things as part of my vision. One, I really wanted my my sons to be Canadian. I wanted to raise them Canadian. So that was vision number one. Vision number two is, yeah, I could stay in the US and start more businesses and invest in businesses, but why don't I go back to Canada and invest in myself and start businesses there? And then number three, kind of just talking to so many people back home, I just saw this huge gap where, Canadians weren't getting funded the way they needed to, weren't able to raise the capital for great ideas, and, and needed mentorship. And so those were my three visions. And so coming back, my first thought, and obviously it was something that I kind of knew how to do, was, hey, e-commerce in Canada, it really needs some investment. It really needs something. At the time there was nothing. And so, we sort of, I remember commuting from the States to Toronto. This is a true story, actually. Every week I drive up to Toronto, and then every Friday night I would drive back to see the kids and Andrea, until we raised $5 million. And so that took us about 3.5 months. We raised five, and then we proceeded to build for a year. And
So you raised five with what? A PowerPoint?
PowerPoint.
So there was nothing. There was nothing. It was a PowerPoint, but you also, to be fair, had a great reputation at this point. You had just come from DoubleClick.
Yeah, you know what? Sure, but I also had great people around me. I think everything is done within a team. I mean, it's never one person, and I appreciate you saying what you just said. But there was a lot of enthusiastic, hungry entrepreneurs around me that were like, "Okay, Drew, let's do this," right? And so we all got together and were able to do that. I think in record time. It was not even a priced round. It was a convertible note with, I think, a $40 million cap, which is ridiculous, right? In retrospect.
Especially back then. I mean, these days it's more common, but back then, no, you did not raise that on us. And that was a seed round. A 5 million seed round was crazy.
Seed round, no product, no revenue, nothing. So we did that, and then we proceeded to build. And what I found out was that at the time, it's totally changed now, but at the time, there wasn't the same available talent that there was to build companies in the U.S. So, there's lots of great technologists and salespeople and all that, but not the startup sort of talent base that Toronto has now, or that's here in San Francisco, and so I think we had some missteps in our first year building out the platform. I remember the launch being Canada Day. And sorry, I left out that we had then closed around a 25 million another year forward.
Small details. So you raised five, and then before launching, you raised another 20.
Another 20. Yeah. And
And
so
and how, just briefly, how did that even come? Did you need the 20, or did you already have that in your pocket? How did that even come to
so
be?
it was actually 25, and we did part of it as strategic, right? Um, and again, that triangle of value, I said, okay, well, we'll build the platform, we'll figure out the merchants, and not a lot of people were selling online at that time, but we need demand, right? Like, people need to know about this thing. And so we partnered with a media company, and they invested along with others, and we closed that round pre-launch, pre-revenue. Um, and then it didn't go well, right? We launched, and I think we did $1,400 in our first day. We
Holy shit.
we had our biggest supply partner essentially pull out because parts of management hadn't approved it and other parts had, and so it was just chaos, right? But what an incredible team we had! Like, they persevered, they figured it out. We righted the ship. We did our first $1 million. We had our first $1 million day, 1, 2, 3, 4 months later. Um, and then something interesting happened, Jonathan, is, when the stakes, so people often think you find out who people are when things go bad. Well, yes, sure, but you actually find out a lot about yourself and you find out a lot about everyone when things are really good. And, if you think about it, like we had gone from zero, I think at our peak, we were valued at $225 million in a very short amount of time. And there was starting to be some cracks, right? Some cracks in that amazing team, and including myself, the stress, the pressure. And so, we raised another 30 million in May of 2014. Was it May of 2014? Anyways, it was a May. And then, as soon as the company was recapitalized, it had 20 million in the bank. It had just finished, I think, a $10 million month, and I stepped aside. Didn't want to do it anymore.
And sorry, how long into the journey was this? Like 2 years?
No, this would be about, well, remember, I started the company well before I came back to Canada. So I actually started the company in 2009, incorporated. So it was kind of 5 years in for me. Um,
So 5 years in, and just to go back for a second, 'cause there's a bunch I want to pick out there, but the first day you spend probably a ton on marketing. I remember seeing ads all over the place. You had a building across the street from your office that was branded, and you sell $1,400 that day. What what did you expect to sell that day, and what is the feeling inside the office when you say, "Hey guys, $1,400, that's the number"?
yeah, that's the proud thing, right? I mean, it was never like oh my God, what just happened? It was always like, oh my God, let's fix this, right? It was such, again, I'm not going to name their names, but it was an incredible group of people that had a lot of mental toughness, that had a lot of belief that e-commerce in Canada needed to arrive. You remember, Jonathan, this is when like businesses were not selling online. There was no DoorDash. There was no, Canadian Tire, our largest retailer in the country, wasn't selling online. Hudson's Bay at the time wasn't selling online. Like nobody was selling online. And so we had this audacious and big goal and big dream. And to the credit of the team, I mean, any problems we had in those early days, we just worked through. And to give you an idea, like our
Can you give us a sense, Drew, of like just one or two things? Because this is what I'm super curious about. You got $1,400, and then you have $1 million day a few months later. What are one or two things that you did to make that shift?
yeah, so what we figured out really quickly was that the best marketing was product and price. So, what I mean by that is like if you have a product that's in high demand, and this is Indochino now, right? If you have a product that's in high demand, and you price it well, and so you can make some money, but you price it well, it will sell. And so we figured out the sort of the 95-5 rule really quickly as a business, and we focused on that 5% that would sell and had the 95% that wouldn't. But going back to that launch, I mean, part of the problem for us was actually the platform, right? Like we weren't even transacting properly. The checkout wasn't working properly and all these other things. And so, but again, like nothing really at that point had phased us. We were just figure it out. Let's solve, which I always say, like, business is one thing. It's just about solving problems, right? So yeah.
I think that's a point just to nail that, because people look at successful people and think, oh well, they just didn't encounter the problems that I encountered, and they were able to avoid those problems. They never avoided those problems. They probably had problems that you never even got to, because all they were doing was just solving along the way. And I love also that you said it never phased us. The $1,400 day didn't even phase us. It was just, that's the start. Let's fix it. And that's the attitude you got to have.
It really is, and if you can maintain that with a great group of people, which is what we've done. Indochino had its an inflection moment too, right, with COVID, where we went from this massive 9-figure revenue company to closing 80 stores in a week, right, because of
Okay,
COVID.
we'll get to Indochino COVID in a second, because that's like the climax here. But just talk about your departure from after 5 years at shop.ca. Why did you leave?
I just wasn't happy. I just wasn't. It wasn't what I thought it would be. the idea of making money and being worth hundreds of millions of dollars and all those types of great things is fine. But I wasn't happy. I wasn't seeing my kids. I wasn't present at home. And I kind of saw some sides of people that it wasn't for me. And so again, when I left, the company had 20 million in the bank. It actually raised another 20 after that. So well capitalized. I just wasn't happy, right? And I'm a big believer in that. Like you gotta enjoy what you're doing. And so it was time to move on. And I told you about that sort of when we started off, spending every day with my kids. And let me tell you a quick story about how that's full circle. My son is about to play Division 1 basketball, and he was on a recruiting trip in Florida 3 weeks ago, and so I went with him. And the coach asked him, "Hey, Liam, tell me about your favorite moment with your dad that doesn't involve basketball." And Liam looked at him and said, "Well, there's not many of those moments, but let me think about it." And then he went back to that time when I used to take him to school every day. And on the way to school, I'd always say, "Okay, son, tell me 3 things you're going to do today." And he'd tell me, "Oh, I'm going to study. I'm going to do my best on my math test. I'm going to play handball, and I'm going to be kind to my teachers." And I would say this to him every day. Okay, tell me 3 things you're going to do today. And so that time I had with him back then, full circle to his recruiting trip, that was his memory, right, of a non-basketball moment, me taking him to school. So I think it was the right decision.
How old were your kids when you left shop.ca?
So around 6 and 8.
About 6 and 8. And so that was the time that you thought, okay, I don't want to miss any more of these years.
That's right. And to give you perspective, so you have it. Like when Liam was born, we were living in New York and California and Toronto, 3 cities, 3 homes, and I was on the road like every week, right? And so it wasn't just that period of starting that company in Canada. A long period of their life, I was not there every day, and that was not something I wanted. Wanted it to be like that for the next 10 years, and I just, that's.
Do you think they perceived it the same, or was that more you missing out, or do you think that it was affecting them too at that young age?
I've such an incredible wife, who is home with them every day and has been with them on every part of the journey. But think about it, like, so I don't think that they noticed, because it's not like I wasn't around. Like I was around, but being present and being around are 2 different things. And look, the last 10 years, I mean, these kids are nationally ranked players. They're 3.8 and 4.2 students. One's about to go to an incredible college and have. I don't know that all of that would have happened unless I made a change, right? And really, you know, and it's not like I've been up since 4:30 this morning. I've been working for 4 hours already. It's not like we don't work, but you have to block the time for the family.
So talk about that moment in March 2020 where here you are with probably 40, 50 physical stores, a 9-figure a year business, and COVID happens. What do you do?
Yeah, man, I'm always going to remember. So this, Jonathan, is the proudest business journey I've proudest business moment or journey or problem solving that I've had. So here we are. We had an incredible 2019. Heading into 2020, we got a TV campaign, 7-figure TV campaign going. We're going to launch another 15 showrooms. We had 55 showrooms at the time. And my wife's big birthday, so we head to Toronto. We literally, at the beginning of March of 2020, host 100 people at our house in Toronto. And then a couple days later, we're heading to Jamaica. I get off the plane in Jamaica, which is one of my favorite places to go. And the driver looks at me. He's like, "Hey, man, COVID hit the island, man." And I was like, "What?" And so I'm like, okay, COVID's here. And so I still didn't think it was a thing. And then 2 days later, the NBA shuts down, and then the March Madness shuts down. And then I was literally on my phone the whole time for a week. And Jonathan, the scary thing was I remember getting calls from some of my management team being like, okay, Peggy's in the hospital. Johnny's sick. Uh, Louis can't come into work because he just can't, like, he can't breathe. And there was a real sense of panic, right? Amongst the staff. And remember, we're frontline, right? Like, our retail staff is in the store and in front of people all day long. And so I just remember saying, let's close it down. We got to close it down. And it was scary because we had so much
In
momentum.
Jamaica, on the phone, you're saying, let's close the business down.
Yeah, let's close the showrooms down. Obviously,
Showrooms down, yeah. Which drive a substantial amount of revenue.
yeah, I mean, we went from, man, I don't know, we went from like 3 million, 4 million US a week to 200 grand a week. Like, it was catastrophic, right? And um, so I remember that, and then I remember talking to the CEO at Nordstrom because we were about to launch that partnership April 1st. Like, we had so much momentum, Jonathan. Like, it was crazy, and it was a lot of hard work to get there. And the CEO just said, "Hey, I know this is tough. You're going to make it. We're going to be your partner. On the other side of this, we can't open the 8 showrooms we had planned for April, but we're with you." And I was like, "Oh man, that's awesome." And then I remember just going down the list of all my partners, calling China, calling Japan, calling Boston, calling Seattle, obviously all of our landlords, which, there's many. And not one person even hesitated, Jonathan. They were like, "We're with you. What do we do?" I'm like, "Okay, here's what we do." We basically, what we did was we cocooned the business. I call it cocooning the business. And so we protected the people, we protected the platform, and we protected what we interpreted as the asset. And we had to wait and see. So fortunately, so that's March. April was, oh my God, what's happening? And then May 15th ish, we started opening showrooms again. And so what I'm most proud of is how the team really fought through that mentally, emotionally, intellectually. Like, we probably didn't realize how crazy it was because we're just in it. I remember doing all hands meetings every week and creating these 3 month plans. Okay, I wanted people to, like, not think about a year from now. I wanted them to be present. I think that helped. And so we talked, okay, let's talk about today and let's talk about this week and here's our 90-day plan. And I think people really appreciated that. And then
And
last thing I'll say is that through all of that chaos, again, business is about solving problems. We had record profitability in 22, record profitability in 23, growth, and we'll have more growth this year. So, COVID was a good thing for us, but man, was it tough.
has the company gotten to the same revenue number that you were at pre-COVID?
Well above, well above.
Well above it.
We entered COVID with 50, I think I said 54, 55 showrooms. We have 84 now. We're about to launch 5 new flagships, hopefully another 5 to 10 with Nordstrom in this year, and then 50 with a new partner. So we'll double our retail network in scope this year alone, going from 84 to double that.
So I want to kind of round the story out with the other thing that we haven't talked about at all, and people will have no idea about this. But we talked about your career starting at DoubleClick, and then you had Shop.ca, and that led to your 6 month hiatus, and then you built Indochino. But before all that happened, you also built a real estate company. And the reason I want to close out with this is because I want to sort of get the point across that this is very much, people will hear your story and they'll say, oh well, he sort of had that opportunity, this opportunity. You've just been carving these opportunities since you were born. You came from not a lot of money. I think you came from a single. You were raised by a single mom, and from as early as I've known you, you had a bunch of rental properties. So like, how young were you when you just started grinding and making money?
Yeah, I remember. So I played a lot of sports. My mom, who's still my best friend to this day, was, the best in the world, but she just simply couldn't provide everything, right? And so I needed to figure out how to make some money in my teenage years. Did that, everything from promoting caravana parties to lots of different things, and then in university, I kind of had this shell shock of like, basketball is fun. Like I played at York, I was at York, but I got to pay for school, and so I started my first business in university. That ended up paying for my college plus 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 plus. Sold that business for just under $1 million. And the first thing I did, Jonathan, was I bought my mom a house. Right, like, so getting into real estate was a bit of an accident. It wasn't like a vision, but I bought my mom a duplex, and then I was like, hang on for a second. So my mom lives in one unit. I rent out the other unit, and I'm paying for most of my mortgage. Oh, okay. Let's try this 50 more times. And so, we've been building that real estate business now for a very long time. And, my wife manages, I think she's got 50, 54, 55 tenants now, ranging from 10K a month to 3K a month. And so she manages quite a load. And that's the family business. And, I talked about investing back in Canada. I mean, we've got, obviously our focus is Indochino. We've got a real estate business, and then we've got, what I'll call a family office venture firm. And across that, we have over 100 investments across Canada and the United States that are active. So, we are an active investor.
So what's the next chapter for you? We every time we talk, there's new stuff going on. Do you see yourself at Indochino long term? Do you want to do other stuff in the middle? What are you thinking next?
Look, I'm so excited about what we're doing at Indochino. I think we've got three really big growth levers this year that I think are going to translate into many many more years of growth profitably. I love what I do. I love the team. I'm going to continue to invest time and my energy in my family. Like my boys are super special, and I want to make sure I'm present for their journey, and I support their goals. And look, I'm a creator. I'm going to continue to create, and whether that's through mentorship, whether that's through investing, that will continue. And I've got one thing actually two things that are one, that I want to bring to Canada and create in Canada that I think will be generational. And so more to come on that over the next 9 to 12 months.
In your classic style, you'll keep us in suspense.
Well, not you. Maybe I'll see you in a few weeks for a beer or something. So you'll know it.
All right. Well, hopefully we'll talk again. We'll share that, and we'll share the journey as it happens. Drew, thanks so much. Where can people find you, follow you, learn more?
I don't even know I think it's the Drew Green at Instagram, and obviously LinkedIn, and my email is drew@indochino.com. So you can even email me.
Awesome. Thanks so much for joining, man. This was great.
Yeah, thanks so much.